If the Fed keeps using this 8% number and keeps ratcheting rates, they will overshoot. None of these rate hikes have affected the consumer yet, and I speculate it's for one singular reason. I don't see anywhere you can be safe. Now, you have to kind of tread water. I continue to add in two areas.
Canadian businessman, entrepreneur, and television personality Kevin O'Leary, a.k.a. Mr. Wonderful, is known for his blunt opinions and accurate assessments of companies, market conditions, and advocacy of cryptocurrencies. In this candid interview with Daniela Cambone, he shares his take on the state of the US markets and economy. He goes on to say when he expects Wall Street and Main Street to truly begin feeling the economic crunch of inflation and the Fed's rate hikes, and he finishes up with what he is specifically doing with his stock portfolio and cryptocurrency holdings. If you have exposure to equities or are wondering what to do with your crypto bags that are down over 50, 70, and even 90% in some cases, the essential highlights from this interview can help you determine how you want to position your portfolio for both profit and tax advantages in chaotic markets. Enjoy.
I don't see anywhere you can be safe. A highly unusual situation going on here, given how much the market has corrected, anticipating slowdown in earnings and a recession and a Fed gone wild with another 75 and potentially another 75 after that. None of these rate hikes have affected the consumer yet, and I speculate it's for one singular reason. That's basically turning on the printing presses, printing money, giving it away for free, dreaming up other reasons to give more money away for free, such as student loan forgiveness. It's very inflationary. And so at some point, we'll have to stop printing money, but it hasn't happened yet. All-time record deficit, consumers flush with cash, and these earnings are proving it out this week. If we're going to get a slowdown in earnings, it's probably going to be in Q1 or 2 next year, because it doesn't look like it's going to make it this quarter. And as a result, we've got a really perplexing, difficult time for investors.
What about inflation fears? I mean, hotter numbers just keep rolling in here. When does that hit the system?
Well, the inflation fears come from the CPI number, which was over 8%, and that is inflationary. However, there's a new narrative going on in the market with investors regarding how the CPI is constructed. 40% is in shelter, and shelter stats are notoriously long dated. In other words, the numbers you're seeing now reflect the shelter market, the housing market, the apartment rental market 18 months ago, when it was smoking hot. That is not the case in major cities now. Rent increases have slowed down, housing prices have softened as mortgages have increased, and yet it's not reflected yet. So it's a little bit of saying, I want to change the data set now because I don't believe it anymore. That's kind of one narrative. But even though it's sitting at over 8%, the market is willing to fibrillate, waiting for more earnings validation that we actually have a slowdown. It's simply not there yet. And so if the Fed keeps using this 8% number and keeps ratcheting rates, they will overshoot. It's not clear how the poo-poo hits the fan on this one yet, but the market has made a decision. The corrections in the S&P 500 have been brutal and fast in every single sector. And so the market, generally speaking, is never wrong forever. And what it anticipates is a sharp decline in earnings, because right now the PE, if we believe the earnings for next year, is sitting between 14.5% and 15%. Well, that's getting close to a bottom. I mean, you could argue the bottom would be 12x, which is really, really low earnings for the S&P, but here we are at 15. I mean, I'd argue it's time to start nibbling. You can't guess the bottom, but my goodness, just on a strong index basis, you could go into this market saying to yourself, regardless what the correction is, 2/3 of it's baked in.
What kind of a shakeup should investors be bracing for?
Well, in the polls, and all of us services that are investing to get this data every day, they're about 6 seats ahead. I've learned in the past that means nothing. There's no guarantees on anything. But right now, that would be the House. You can't call the Senate. So let's say the House flipped. The good news on that is all new bills, all new initiatives that are not bipartisan bills. In other words, ram-a-jamma down your throat bills like the student debt thing, ram-a-jamma bill like anti-inflation bill. I mean, nobody wanted to vote for that on the other side of the aisle. So those kinds of bills are dead for the rest of this presidency. There'll be total gridlock. And that is a good thing. The markets love gridlock. Markets like a pause that refreshes. We need a pause. The printing presses have gone insane, and that's why we have inflation in the first place. I mean, for all the talk about inflation, you print $6.72 trillion in 30 months. What the hell did you think was going to happen? Of course there's going to be inflation.
O'Leary goes on to explain what stocks he is buying and the exact criteria he looks at when making both stock and crypto investments. Watch to the end to get O'Leary's take on what Web3 mass adoption depends on, and finally, he reveals the one crypto he would hold if he could only hold one. As we return to O'Leary, share in the comments below if you think the bottom is in for stocks or crypto. Please like, subscribe, and hit the bell so you get immediate notification of tomorrow's video where Lynn Alden breaks down the seemingly unrelated factors that are all simultaneously contributing to the worst bond market crisis since World War II.
I don't see anywhere you can be safe right now. You have to kind of tread water. I continue to add in 2 areas, really high quality US S&P 500 companies, of which I buy 100 of the 500 in an index from Alps called OUSA, names in the Russell 2000. So a fraction of the Russell 2000, the companies that make money. My whole thing now is, while I'm waiting in the weeds, is I'm willing to buy companies that are profitable, have high return on assets, and do cash distributions. Everything else I don't want to own, because those are getting absolutely crushed, and the bottom is not in yet. So many companies, when people thought, oh, it can't get any lower, and it goes down another 40–50%.
Yeah. What are the latest things you're hearing on the crypto front, Kevin, that we need to know about?
The whole Web3 movement, which was what that whole conference was about, is more towards mass adoption. Everybody that's investing money into that is trying to solve for the wallet, number 1. Number 2, security, and number 3, regulation. Those are the 3 horsemen of the new Web3 movement. Mass adoption through regulation, through security, and a much easier to use wallet. The best analogy I can give you, until your grandmother can figure out how to buy Bitcoin on her cell phone, we don't have a wallet that works yet. It has to pass the grandmother test. Well, I'm doing what a lot of other traders are doing. I'm going into the November time period with over 34 different positions on, many of them underwater. So naturally, what I'm going to do, now that the IRS and other regulators around the world are now looking at crypto in terms of tax compensation, very much like a security, I'm going to have to trade. So I'm going to be doing trading, taking some of the projects that have been decimated, down 40, 50, 60, 70, 80, 90%, selling those and basically buying what I consider the granddaddy index of all crypto, Bitcoin. So I can go through the tax season owning more Bitcoin. I will, maybe a little bit more Ethereum, but basically the large market cap names are the ones that matter. So if you're going to do a basket of names to hold through the back end of the year, I would say it's going to be Bitcoin, Ethereum, Polygon, Solana. Those are huge market cap names, and I think are going to index together. I don't think any one of those breaks out of the pack. They all kind of trade in tandem. So if you're only going to own one, it's probably going to be Bitcoin, but all the rest trade in tandem with Bitcoin anyways. Right now, people are focused on the Fed, they're focused on the midterms, and all of this is going to play out in the next 5 weeks. So stay tuned. It's going to get really interesting.
Check out this video to find out why Jim Rogers thinks the next recession will be the biggest he's ever seen and where you can invest so you don't take the fall.